Good morning, everybody. Welcome to another edition here of the Box Market Update. And we're just going to give this about another minute for attendees to come on. I'm seeing Pete piling in here. So let's give about one more minute. We'll get started. All right, well, let's get going here. Well, hello, this is Scott Ebeling. I got Allison Coldewey joining me here as well, as always. And this morning, we're gonna talk about the Box Market Update and how Box can help close bigger deals. Can't believe it's March already. Crazy. Yeah, my name is Scott Ebeling. I'm Director of Pricing and Strategic Solutions, and joining me as always is Allison Coldewey. She's our Senior Pricing Analyst here at Box. Three things we'll be talking about today. One is we're talking about a little bit about Box here again. As always, this for newbies on the call here. We got plenty of them today. And a market update, which I'll be doing, and Allie's going to be going into talking about how we can help you close bigger deals. Really important session here. Going to be a great listen. Please save your questions for later in the call. Type them into the queue here, and we'll answer those at the end. Allie, why don't you take it away here about Box?
Awesome. Thank you, Scott. Good morning, everybody. A little bit about Box, just in case you guys aren't already familiar. Box is a national energy broker. We are a master energy broker serving independent brokers and consultants all across the lower 48 United States. This is our service territory map, so you'll see that we are licensed in every market. The green states there have some natural gas options available for choice programs. Our states in blue are natural gas and electricity availability. And then you see some states in gray with some stripes through them. Those are states that are deregulated, usually for large commercial and industrial natural gas. You can expect those states to have some minimum mandatory thresholds, but there are some opportunities out there. And honestly, if you're starting to work with bigger customers, like the ones that we're going to talk about in just a little bit, then there could be more opportunity here. So if you see, any states here where maybe you're not licensed, but you are working with a customer that has locations there, don't hesitate to reach out to us. That's exactly the type of service that we want to provide for our brokers. More markets, more suppliers, more licenses. Our next slide goes into our suppliers and gives us a good overview there. So you'll see a lot of names that you probably recognize if you're familiar with retail energy or direct energies, Constellation, Hudson, Freepoint. Hudson was actually our supplier of the month, so shout out to those guys. We work with a good number of suppliers across the board who have a very strong backbone, who are national energy suppliers, who've been in the industry for a long, long time. They're not going anywhere, and provide a full suite of energy products to their customers. We also work with a fair amount of niche suppliers. So the suppliers that are smaller have really, really strong expertise exactly in their area, some smaller natural gas players that are just invaluable assets to us as well. So if you see some names on here where maybe you've wanted to price with them, you don't have a relationship yet, again, don't hesitate to reach out to Box. That's exactly why we're here. We have great relationships with each of these guys. Our executive management team has all worked on the supplier side at some point, so we've got great relationships here, and we're happy to put them to work for you. That's it about Box. So Scott will get started on our market update here.
All right, well, looking forward to hearing from you in a few minutes here. So market update. It's only been about 3 weeks since the last one, a little shorter time period, but we'll get into it here. We're first going to talk about where the prices are at right now. You can see here, Henry Hub natural gas is $3.90 for 2024, 25, 26 are heading out there, and 433, 436. So the prices are in the mid-4 area. Pretty fairly priced, I believe. ERCOT is in that 40, in mid 40s, and kind of you see here, it's all much less than it was back in December and late in late summer areas. And you can see here a little bit of a change though, a pretty decent size move up in these term markets. Not as much in the front of the market, but in the back, and we'll get to that in a second. But you can see these movements here, and that's all. Well, we talked about it last time how these markets are getting cheap, and really really you're gonna have trouble with anything selling under $4 gas for these periods in 25, 26. We're definitely going to get into that in a few minutes here, why. And power moved likewise with it. Here is a chart of the trend of the chart, a trend of natural gas. And this shows the blue line there is the 12-month forward strip. So that's looking from April of the strip from April of this year out through March of next year. How that's moved over the last few years. You see the green one is the spot price. We call that the CNBC price because that's what's headlined and everybody talks about, but really no one is buying gas or power for a 1 month period of time in the future. If you were, you just see the volatility you face. If you're in the index markets, it's the volatility you face. But the blue you see here, we are kind of pretty much, been bounced off where we were back in, a year and a half ago in the fall period of 21. And we're kind of, itching, spiked up a little bit, but, kind of, I think that's a $3 level here for the next 12 months. That's definitely a good floor level. And we've talked about that as well, and we'll get into that. Here's a natural gas price forward curve. This is a monthly forward curve. So look at each month in the curve. This is the prices. You can kind of see how the market is in what's called contango, which means higher prices in the back months than the forward. And you can see the shift there. Again, the green, less of a movement in the immediate year, in the immediate next 3 or 4 months, and more so in the latter months. And same thing now with the power price curve. This really shows that seasonality as well. And you can see here the bigger spikes in the summer and the winter months, and especially with Mass Hub and NEPOOL out there in the winter. And December has really, interesting. December's shifted out a little bit more for all these hubs in PJM and Mass, just because of the Winter Storm Elliott that hit up in mid-December and really caused some huge spikes and some issues. And but we're again, this is where the market's at. Mass Hub is just there because, again, we talked about it before. Gas is kind of an island over there. They have to get gas, LNG gas from the cash market, the spot market, that the same ships that we go to Europe would they got to compete for those same markets over there. So they're paying a higher price for gas in those winter months, and it's reflected in the basis price of gas. Natural gas storage. Look at this. This is crazy because we are now pretty much near 5-year maximum highs, and we very well might finish out there, depending on how the weather turns here in the next couple weeks. But we very well turn at the 5-year high, or maybe set a 5-year maximum at the end of this withdrawal season, which has been crazily quite a warm winter throughout the United States. And that's what I mean. I can't believe winter is over because it doesn't really feel like it really got started all that much. And here is natural gas, though, reflected with Freeport if it was online. And Freeport is starting to tweak online, and we are seeing that now with they got some gas being sent over their pool, ready to go out. Some of it has been being shipped out. This is imminent. It's going to be happening any day now, where it's going to be fully every day. But they have sent out some shipments of 1.5 BCF a day here and there, and it's going to be kind of consistent basis coming soon. But what we like to see here is kind of a little bit of a structural side of gas to see, like, gosh, even with this warm winter, this warm, very temperate fall, perfect fall, almost a perfect winter. We've had relatively, and with Freeport. If Freeport was online, we'd still be kind of just above these 5-year lows. So quite a change in where we'd be. Here's actual in the black, and here is what up there in the black part there, and there in the green is where, or in the blue is where Freeport is if it was online. So a very large gap there, 600 or so BCF. End of winter, again, here's where you see the end of winter storage estimate here. This is for the end of March here. We're currently at this, kind of, just above 2,000, 2,100 or so. So very feasible. We'll probably end up around right in between these levels here, around 1,900, 1,950, which is a very healthy level. That's why we have gas and hitting in the tubes here for the front months. But doesn't mean that it's going to be this case. We don't know what's going to happen this summer. We don't know how early winter's going to hit next year. So we have no idea what can happen in the forward terms with the weather situation in this storage fill. U.S. gas production, we've shown this slide, and we're just showing it again here just because it's kind of important here. Production is kind of stopping out here. We don't anticipate it to get much above this 100, 101 area and for the year, and if anything, it could shy underneath that towards the latter part, just because drilling has been, the CEOs of drilling companies have been saying they're not really putting much investment into it with gas prices where they're at. And also, another note here is a lot of producers, they're less hedged than usual for gas right now. They were expecting higher prices, so they decided not to do all the hedges. And so with that, there's less cash really coming in than what people would expect, and just knowing from where they could have hedged. And so they're kind of the spot market. That's less money that can really come into for investment purposes as well. And they're definitely not going to go and finance drilling here at these gas price levels. And then here is LNG exports. They're growing. You can see that here. And really, no new terminals really. And this is the key part here. There's no new terminals really for this year. And that's why we'll probably continue to see no new terminals coming online. New terminals are being built, trust me. So these all are here, but no new terminals coming online in 2023. And so with that, we can continue to have, with normal weather here, probably a storage surplus, which means that, we're kind of looking less and less dangerous for winter of 2024, and saying it's relatively fairly priced. But beyond that, and looking at what's going to happen in the next winters, this is now 6 BCF a day of new exports in 24, 25. This is that big chunk there. So without new production, with this coming online, we are going to quickly go from really a supply surplus to a decent supply deficit. And that's why one reason why we've had some prices moving out, and why we think that $4.50 to $5 is more fairly priced, and there's more upside risk and downside risk from those levels. Finally, on kind of analysis here, capacity prices, auction results came out between these last calls here at the end of February. You can see that continued lower levels. Again, this is a preliminary one. It's first auction, there's usually 3, kind of sets the tone here, but I can expect some of these to go higher because a lot of the bids here were done before Elliott, and some of the issues we had there with some of the reliability issues. We could see these tweak up a little bit. But yeah, this is the first auction, but again, lower prices. This is really crazy. This is equivalent, some of these $28, $29 equivalent for most customers of capacity costs being, $2 to $3 versus, $10 to $15 as they were just a few years ago. And you can see these big drops here. Here's what they're currently showing on their bill. If they have a pass-through, or really kind of if they even had like a bundled, how many have significant drop in these capacity prices, that's good. Be careful though. We just want to really reiterate that this is, this is the tricky part here with contracting, and we're here to help. Suppliers can have vastly different methods of calculating these in the future, and how they're putting into the same fixed price, fixed all-in bundled price. Be careful. We're here to help you. We're here to help guide it. We've read the contracts. We know what's in them. We know how to help you make sure there's an apples to apples comparison. And finally, some noteworthy items here. Again, January 23 was the 6th warmest January on record in the US. It's 5.1 degrees above average. And February was trending here above normal as well. March looks about normal, but really we're getting now March where normals are. And in Chicago here, it's low to mid 40s right now. So that's really not putting a ton of winter load. Even if you get 10 degrees colder, it's not crazy. So this was a very, very warm winter on record here in the US, and that's why, again, we're having these low prices. Note with items as well. Lubbock, Texas is opening the retail choice in October 23. We're ready to kind of like start talking to you guys about this. Hit the ground running. You know, the early bird gets the worm there, and get out there as quickly as possible. If you're in Texas based and you want to, work with the customers, we can help you with that. Just contact your account executive, and they'll get you in touch with our pricing desk. We can help you out with that. Then we'll be getting some more stuff out on this as the spring goes on. And finally, we have utility price to compare data amongst a lot of other data we have, but we have this data. Again, if you need something, ask your account executive. We got a pretty quick turnaround on this to be able to get this back to you, definitely within the day. And that's let's just go over these strategies again here. And this is kind of again to maintain these strategies, just be disciplined. Remember, these are short positions that are being, when you're purchasing, it's covering a short position, not necessarily taking a long position. This is a very volatile market, and being short a volatile market, the most volatile market in the world, can be very dangerous. Set the strike price. This can increase the chance to participate in a market dip, especially for customers that are decent size, a megawatt and above kind of stuff. 4,000 or 5,000 megawatt hours a year. This is where there can be, definitely be an advantage to set a strike price once you choose a supplier and get a strike price signed, because it gives an advantage of hitting more on the bid side of the market versus the offer side. And finally, hedge something. Take advantage of drops. No one really has a crystal ball, can predict where markets go up or down, but you can be disciplined and be hedging, have a hedge strategy in place. And again, we're here to help you with that. That is all here for today in the market update. Look for any questions, and anytime I'm always free. This come to your account executive if you have any questions about the market. I'm definitely willing to get a call. Take it away, Ellie.
Awesome, thank you, Scott. Great opportunities out in the market right now as we head into spring. So definitely reach out to your account managers, see what's out there. We're going to move into our feature, which today is how Box can help you guys close the bigger deals. We love big deals. We've built a very efficient machine on the matrix side to easily compare prices and really easily transact. But the bigger deals require a little bit more love. So we want to be able to help you guys close, and we wanted to go over all of the ways that we can help you guys do that. So what does Box bring to the table whenever we're talking about the bigger deals? We are a team of energy experts with 100+ years of combined industry experience. As I mentioned earlier, almost all of our executive staff, if not all, have all worked on the supplier side as well as on the broker side. So we've got industry expertise that we're happy to put to work on your account. Again, this is the kind of industry where, unfortunately, what you don't know can hurt you, as I like to say. So it's better to be dealing with somebody who is informed, who is looking at this kind of stuff every day. We offer national and regional market intelligence. So power and gas trends all across the country. Those are forward curves. Those are some of the things that Scott was talking about with utility price to compare data, those types of things. We're happy to give context to the products and the services that we're recommending. And that's really everything when it comes to helping your customer make a decision. How can you tell them that this price is a good price? It's by giving them that context, and we're happy to provide you guys with that. We provide custom rate analysis, product comparison, and pricing proposals for these larger customers. So if you have a large customer that is paying a fully fixed rate and is finding that they're missing out on some opportunities to participate in the real-time market, that's something that we can give them the opportunity to do. Likewise, if they have been passing through capacity and getting hit with increases, it's something that we can look at a contract where their capacity is contractually guaranteed over the next 3, 4, 5 years. So depending on what your customer needs, we're able to come up with a product that fits exactly them, their risk tolerance and their preferences, their budgetary needs. And we're able to put that product into a proposal that really articulates the benefits of what that product is going to do for them and how it's going to perform. So those proposals are really, really excellent tools that you guys can use. They really better help convey the ideas in terms of how we're managing these costs. Like I said, with the capacity language, we negotiate the best contract language to benefit the customer. Everybody knows that whoever writes the contract is writing it to their benefit. These supplier contracts are absolutely going to be written to benefit the supplier, to limit their risk and make sure that they're not put in a position where they're underwater. But having Box on your side and having us do some of this contract negotiation for you allows us to put the customer in a better position. When the customer takes on risk, they should not only take on risk, but they should also take on the same benefits that the supplier gets whenever they're absorbing that risk. So we're able to pass along those benefits to the customer, whether that's cost savings, whether that's more bilateral language, just depending on the type of customer and who we're dealing with. Those can be really powerful tools. And then the other thing, don't forget, we do have value-add products like Utility Data Box, which is our system where you can report on, view, and track your invoice data, usage patterns, budgets, demand response items, etc. We do offer demand response. We've got a best in the industry offering there that can either pair with a supplier or can be a standalone demand response offering. And we also offer some options for on-site efficiency. Again, those programs are local to Texas right now, but LED, HVAC retrofit, looking at energy efficiency projects, all those types of things, definitely stuff that we're interested in. So that's our toolbox, and we wanted to review that for you guys because some of those could potentially be helpful for your customers. Going into just some very quick do's and don'ts. These are like our ABCs, just very important with every customer, truly, but really helpful with these larger ones. Do take a consultative approach. Don't offer only one product or solution. Listen to your customers and put yourself on their side of the table. You're an asset for them as a broker. You can become their energy expert, their go-to, their person who handles this stuff because they have a business to run. So consulting with them and understanding, point number 2, their pain points and their risk tolerance is absolutely paramount for these larger customers. Understanding their risk tolerance can help you understand what product is going to be best for them, and understanding those past pain points can be very helpful too in terms of steering them towards a supplier that may be a little bit better match for the service level that they need. Don't promise savings, please. We go through this, especially now that we have price to compare data. Utility rates are sometimes non-competitive against retail supply rates. We had, for the most of last year, retail supply rates were higher than local utility rates because utility prices hadn't caught up with the real-time market and with what we were really seeing on a go-forward basis. The thing about utility rates is that they change. If it could be, 22 or 30 cents 1 month and then come back down to, 14, 15, or lower, 9 the next month, just depending on how the utility is managing their costs. So utility prices change, and make sure that you're conveying that to your customer. Fixed pricing, the value in fixed pricing isn't necessarily savings, it's budgetary certainty. It's an insurance policy so that you know that if and when the markets do go crazy, that they are protected and that their risk is limited. Do collect as much data as possible. So this is your LOAs, your bill copies. Literally, the more of a download you can get from your customer, the more context you can get from them in terms of the ways that they've managed their costs in the past, the better a position we will be in to make a recommendation going forward. That data can be contracts, again, it can be invoices, but we're not afraid to sort through it if we can, and all of the information is helpful. in terms, of confirming a number of items. So as much data as you can get from the customer, very, very helpful. And then this is also very important, don't forget to set a timeline and expectations. Whether you're setting that timeline for your customer and you're being proactive for them and saying, hey, this is when I'm going to get back to you, or if the customer has their own timeline based on their financial setup and they need pricing in a certain time, or they have a certain process, they have certain expectations in the way that the information will be presented. Don't forget to talk about that stuff with your customer. The rule is always to under promise, over deliver, but the way to do that is by making sure that you're very, very clear on the timeline and expectations in the first place. So that's our big deal overview. If you guys have any questions on that or our market update, I think we've got a few minutes left. Unless, Scott, do you have anything you want to add on our big deal spiel?
Yeah, real quick. And this is great stuff here, Allie. And I think the biggest part here is really just kind of getting into the headspace when you're working with these larger customers of being a consultant versus a broker. And there's just a difference. Often there's a use for being a broker. A broker is just you're going to go out and collect bids and just offer bids and not really add as much value-added services versus adding all these other value-added services and these consultative approach and asking questions. And from all the sales and my years of experience of sales is, and dealing with, especially working with a larger kind of customer base, is what always works best is just, really that first meeting is just asking a lot of intelligent questions and having this a dialogue going back and forth. And you immediately establish trust instead of just kind of showing up with prices in that first meeting. And just being another kind of price person out there. Be something different, and you got to differentiate yourself in the market is really important. And that's really all I have on that. And we'll take some questions here. I do see one, and it's a good one here for you, Allie. What is the size, the number, kind of what qualifies something as a bigger deal versus a smaller deal? What's that kind of bar?
I think that we're looking at customers that are over 1 million kilowatt hours a year or over 100,000 therms. Those customers start to require these types of approaches rather than like you said, Scott, going in with just kind of a one approach fits all, one fixed price to rule them all. I think looking at customers that are over 1 million kilowatt hours, and especially as you get past that mark, when you get into customers who are using 3 million a year, 5 million a year, you're going to want to be like exactly what you said, Scott, asking them all of the questions, understanding their history, understanding their goals, and just absorbing all of the information that you can, so that whenever you're going out to market on their behalf, that you're equipped with everything you need to deliver something that really works for them.
Good. Excellent stuff here. And I believe that's all we have for today. And just let you guys know, we are here to serve you guys. We love this business. We love helping you out, especially the pricing desk. And actually, what? I do see another question there, and it kind of comes into this. It's funny. Yes, we will get on phone calls with the customer. We can be a part of your team. So that was a question on here. It's like, will you guys willing to join on customer calls? Is yes, we're willing to join. We have done this, and I'll tell you what, in fact, we have done data on this, and our success rate doubles on the close ratio if we actually get on a customer call. If you're our team, we can be a member of your team. We can just get an extension. We can give you market updates. We can help lead the questioning. We can give you technical advice. We can do it all. We can provide that. If it's a very, very large customer, we seem to have some of an exclusive role in it. We can even join in person. Definitely, we can join calls virtually anytime. Anybody member of the pricing desk team can join those calls for these larger customers. So that's great. But we're here to serve you on. It's not just larger deals. It's the matrix. It's everything. We've got many community solar. We got a lot of exciting tools and resources we are developing. I'm on, I know Allie is too, on 3 or 4 calls a week on development of different tools and resources and improvements that we are doing, and we're continuing to grow here and evolve, and just putting everything into this to make this the best service company and the broker service company in this business. And we feel we are already, and we're just going to keep that mantle. We got to keep improving to keep it and keep providing you guys a service. So thank you, everybody. Looking forward to again the next month. And we'll be discussing the market update for sure, kind of looking more ahead into the next winter and seeing what kind of storage situation looks like as we've at that point been out of this winter. So have a great day, everybody. Thank you.
Thanks, everybody.